Hey guys, Brian here. Hope your week's going great. In this video, I'm going to show you a chart that will put the 2021 stock market top into context with the four most important market peaks since 1900. If you're a fan of market history, stay with me. All right, guys, welcome back. Before we talk about this chart, let me just show you where I was last weekend. These shots are from Lago de Colima. This is a really nice lake in the mountains of Colombia. It's about a 2-hour drive from Cali, but the roads, I gotta say, are a mess. Took us about 3.5 hours just to get to the lake. We got about 15 minutes from our place. Road was washed out. 2-hour drive turned into a 5-hour adventure, but that is the fun of Colombia. Beautiful lake, really enjoyed the place. So check it out if you are ever near Cali. All right, so back to this chart and a little review first. We published this one at the start of 2021. All we're looking at is a composite of 15 valuation measures, right? How expensive is the stock market historically? At the time, 11 of those 15 gauges, highest levels ever. And together, stocks were more expensive than they were in the late 1990s, more expensive than the go-go peak in the early 60s, more expensive even than the early 1900s. And valuations were even on par with the 29 peak, which obviously led to the Great Depression. So as you know, wave analysts, we always want to put current market behavior into its proper context. We evaluate everything with respect to previous market behavior at the equivalent degree. And this chart was a big reason why we expected a major top last year. So on that note, let's take a look at another sentiment gauge that illustrates just the progress of the bear market so far. I say progress, but it's really just a lack of progress. This chart is cool because it looks at household equity holdings as a percent of total assets, right? So we're essentially looking at how strongly committed to the stock market is the average US household. Latest reading, 27.5%. That was the end of the first quarter 2022, way higher than anything we saw in the 1960s, higher even than the top of the dot-com mania, which saw the NASDAQ crash 78% from that point. So this chart is going to be really interesting to update as this bear market plays out. And those low watermarks in red, they could be important. Equity holdings fell to about 11.5% at the low in 09. They fell under 6% at the low in 82. But remember, those were primary and cycle degree lows. The current bear market is 2 degrees higher. So before it's over, it's very likely that household equity holdings will be at a record low. What we can say for sure right now is that we're nowhere near those levels of pessimism.